Hello everyone, it's Monday, November the 7th, and I'm David Song, currency analyst with dailyfx.com, and very interesting round of trading that we have here on Monday. Seems as though price action is really just choppy as we head into the U.S. session, and right now we did see the U.S. stock market open a bit higher, but really just flat right now, sort of in the red. Dow Jones is down by nearly 0.04%. S&P is up by just a tad bit, opening or actually 0.02% higher. Nasdaq a little bit mixed, or just more flat right now at minus 0.01%. So we'll have to keep a close eye on how risk continues to develop throughout the remainder of the day, especially as we do have a fairly light economic docket for the remainder of the day. We only have one bit of data that we're keeping a close eye on, which is, of course, the U.S. Consumer Credit Report for the month of September, which is expected to show credit expanding 5.2 billion in the month of September, following that 9.5 billion contraction that we've seen in the previous month. But getting straight into price action, a lot of things clouding the outlook for the euro area right now. Of course, we do have the EU. They're actually convening in Brussels today, so we'll have to keep a close eye on that summit, where European policymakers are scheduled to discuss or lay out further details of the Europeans' financial stability and how they plan to broaden those powers, essentially. And at the same time, we're also keeping a close eye on Greece as well, as we did see the Prime Minister step down, and now we're looking at a new coalition in Greece. But at the same time, we're also seeing a lot of pressure surrounding Italy, where the Prime Minister is facing a lot of pressures to step down, and especially pave the way for a new government, especially ahead of the parliamentary vote that we have on those austerity measures tomorrow. So we'll have to keep a close eye on those developments coming out of the Eurozone over the next 24 hours. Trading should have a pretty big impact on the euro dollar. Right now, just keep taking a close eye on price action right now. We saw this overnight advance really just stall out just ahead of that 20-day moving average. So really just confined by those levels here. But as we do see price action continue to hold below the 61.8% Fibonacci, right around that 138.80, 139 level, certainly looks as though we're carving a near-term top right now, suggesting that we will see this short-term reversal from that 142.46 level, gather pace in the days ahead. Really right now, we did get some comments from the International Monetary Fund as well, namely from Managing Director Christine Lagarde, saying that ultimately the group might lower its outlook for global growth, especially in light of the recent developments that we have coming out of the major industrialized countries. It seems as though this protracted global recovery will be a growing theme going forward, and in turn, we heard Ms. Lagarde encourage the G20, the group of 20, to take additional measures in stimulating global growth. So, in turn, could open the door for additional monetary easing, not only from the Fed, but across its major counterparts, such as the European Central Bank as well as the Bank of England. So, taking a look at the pound dollar, which of course we do have the BOE policy meeting this week, which certainly highlights the biggest event for the pound. But again, BOE is widely expected to maintain its current policy after we saw them unexpectedly expand their asset purchase program to 275 billion pounds during the previous month. So this time around, we might see the BOE really just refrain from doing anything, and in essence, we might not even get a policy statement this time around. So, as a matter of fact, we might see market participants overlook the BOE interest rate decision this week. But I'll certainly be here to cover that in the Daily FX live trading room. So, hopefully we might see something there. But if not, we'll just have to keep a close eye on not only the BOE minutes, which are due out on November 23rd, but as well as the Bank of England quarterly inflation report, which of course comes out ahead of the minutes on I believe they are scheduled for November 16th. So the quarterly inflation report could take some steam out of the BOE minutes, but again, we want to see keep a close eye on those on the vote there. Especially as we try to assess what the BOE tends to do or intends to do going forward, given the fact that the BOE has seen an increased risk of undershooting that 2% target for inflation. So in turn, we might see a growing argument to expand monetary policy further over the coming months, and essentially leading the MPC to carry their easing cycle into the following year. So what does that leave in terms of the euro pound? Of course, given as we do see the fundamental outlook not only for the UK but also for Europe really deteriorate, We'll have to keep a close eye on the euro pound, especially in terms of the fundamental developments here. But more than anything, it seems though we'll see some more range-bound price action in the euro pound. Certainly looking at former support right around this 86.70 level for new resistance. So we might see the exchange rate really just trade between this even narrow range now between 86.70 and 85.30 level, so keep a close eye on that. But more inclined to keep a close eye on the euro loonie, which we saw it threaten the range bound prices in the previous week. It's come down somewhat and really just holding steady. So it seems as though the euro loonie is better positioned for breakout over the near term. So keep a close eye on that. And more than anything, I'm really just trying to look for opportunities to play this to the upside here, as we do see it maintain this broad upward trending channel from early on this year. So keep a close eye on that. Once we do see a clear close and a break and a close above this 141 level, should set the stage for another run at that 38.2% Fibonacci right around that 143.80, 144 level. So keeping a close eye on this pair. I would like to try to get as close as possible to this 138 level to go long. So we might see this overnight reversal continue to pan out, and should it, might look for an opportunity to buy just right around that 138 level here. Taking a look at the dollar loonie here, after we saw it find support around this 78.6% Fibonacci, this near-term reversal really is panning out pretty well. But again, it looks as though there's some near-term resistance right around that 102 level. So still waiting for a break above that to get long on this pair. And again, we might see, should we get that break above 102, should pave the way for a run at that 61.8% Fibonacci right around that 105.70, 106 level. So it looks as though we might see some more Canadian dollar weakness pan out over the near term, especially given that very dismal employment report that we saw coming out at the end of the previous week. So in turn, could set the stage for some more monetary easing from the BOC, especially after we saw them maintain the benchmark interest rate pretty much throughout the second half of the year. So in turn, we expect to hear some more dovish comments coming out of the BOC, and in turn, some Canadian dollar weakness over the near term. Aussie, similar story here, just continues to maintain what appears to be resistance just right around that 100-day moving average, which is now coinciding with the 200-day moving average. Looks a bit toppy right now, so could see some more weakness over the near term. But today, right now, keep a close eye on risk trends for the Aussie. So in terms of the Aussie, really don't have much over the next 24 hours in terms of any major developments. Of course, we do have business confidence and the trade balance coming out, but more than that, we'll have to keep a close eye on the Reserve Bank or the next interest rate decision from the Reserve Bank of Australia. But given that we are expected to see a positive employment reading later on this week, could help to prop up the Aussie. But again, the fundamental outlook for the island nation really remains weak right now, especially given the slowing recovery in the global economy here. So similar story here for the Kiwi, although we're seeing the Kiwi outperform against its major counterparts. But watch that 200-day SMA has held up really well as resistance over the last few days, and now as we see a lot of these moving averages really start to turn over, namely the 10-day moving average and the 20-day moving average that we have here, looks to be really just turning over. Should see some more weakness over the near term. But we do have the Reserve Bank of New Zealand coming out with their financial stability report later on this week, so keep a close eye on that. We might hear some more dovish comments coming out of the RBNZ, especially in light of the recent data that we saw, which was weaker than expected. So in terms of that, we could see some more not only Aussie weakness, but some Kiwi weakness as well over the near term. But that also brings us to some of the lower yielding currency pairs here. Swiss franc, we saw it actually trade on a weaker footing during an overnight trade after we saw comments from the SME suggesting that they might take additional steps to stem the marked appreciation in the local currency, especially if we do see the fundamental outlook for Switzerland deteriorate further over the near term. So a lot of speculations being floated around that they might actually lift the floor on the Euro Swiss to maybe even around that 120, or maybe even all the way up to that 130 level. So we have to keep a close eye on those developments coming out of Switzerland as well. But right now, it seems as though this rebound in the dollar Swiss could gather pace in the days ahead. Similar story here for the dollar yen. So although we're seeing the yen really advance against its major counterparts, really after that intervention by the finance ministry, we're seeing the Japanese yen really just regain its footing. So could see another threat of a yen intervention in the days ahead, but don't want to get too ahead of ourselves here. Again, do we expect to see an intervention by the BOJ? Probably not. It seems though the central bank will just continue to ease monetary policy further to dampen demand for the low yielding currency. So really, it's up to the finance ministry, and it seems though they will take additional steps to really will continue to intervene in the currency market to address or to balance the risk for the region there. So keep a close eye on those comments from the finance ministry for more clues on whether we'll see another yen intervention over the near term here. But for the remainder of today, again, don't have too much in terms of economic development. So risk trends should play a crucial role in dictating price action over the remainder of the day, but pretty much just watch those developments coming out of the Eurozone. We'll keep everyone updated on our real-time news section, but that's pretty much all I have for today, guys. Just watching a lot of these developments coming out of the Eurozone should help us to get a better gauge on what to expect in the days ahead. But again, keep a close eye on that Euro looning. That's pretty much the best trade I have going on right now, or my most favorable trade I have going on right now. So I just want to thank everyone joining me today, and just want to wish everyone good luck in trading.